Ladies and gentlemen, good day and welcome to the IDBI Bank Q1 FY23 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Renish Bhuva from ICICI Securities Limited. Thank you, and over to you, sir.
Hi, hello, and good evening to everyone. Welcome to the IDBI Bank Q1 FY23 earnings conference call. From the management team, we have with us today Mr. Rakesh Sharma, MD and CEO, Mr. Samuel Joseph, Deputy Managing Director, Mr. Suresh Katnar, Deputy Managing Director, and Mr. P. Sitaram, ED and CFO. We'll start the call with brief opening remarks and then we'll open the floor for Q&A. On behalf of ICICI Securities, I would like to thank the IDBI management team for giving us the opportunity to host the Q1 FY23 earnings conference call. I will now hand over the call to Mr. Rakesh Sharma for opening remarks. Over to you, sir.
Thanks, Mr. Renish. Good evening, ladies and gentlemen, and welcome to this IDBI Bank analyst call. Thanks for attending the call. First of all, before I hand over the mic to Mr. Sitaram for making the presentation, I'd like to give some brief background. The June 2021, the results have to be seen in this context that we had two major recoveries from Kingfisher and Videocon account, and the 590 crore was credited to interest on recovery, interest income, and 278 crore in TW, apart from other recoveries. And that quarter we had recoveries of 1,646 crore. So this 868 crore was unusual income. So the results have to be seen in that context. So that is why since high one-off income was there in June 2021, so the numbers will have to be seen in QOQ reference, March 22. And overall, we have also recovered around 1,136 crore recoveries have been made during the current quarter. But these have mostly gone in reversal of provisions. So the operating profit and the net interest income may not be comparable with June 21. So, but QOQ there has been improvement. And if we exclude this one-off income from all base as well as June 22 number also, so the numbers will show substantial improvement. So with that, I will also like to mention that whatever guidance note we had given previously at the beginning of the year, we have been able to achieve all the targets. Rather, in some cases, we have been able to surpass the targets. So like I showed that since the bank was under PCA up to March 2021, so this is the now we have started growing both in retail as well as corporate advances. Earlier there was some restriction about corporate. So the growth has been 12% YOY, both in retail and corporate. And this is a good sign and good beginning. Apart from that, we have been able to achieve the other targets which I said: ROA of 1.03%, ROE of 14.80%, which are all above the guideline information. Slippage ratio is 2.5. Credit cost, I had given indication that it will be around 1.25. But this time we are improving upon the guidance note, and we feel that since we have been able to control the slippages, the credit cost will be less than 1, and for this quarter it is 0.52. So we have made some proactive provisioning, and with that, the net profit, of course, despite proactive provisioning, there has been good, this net profit, there has been an increase of 25% YOY and 10% QOQ. And the capital adequacy is quite comfortable with CET of 17.13 and total capital adequacy of 19.57. The digitalization, we have been making some good improvement, and 95% of our customer induced transactions are through digital channel only. So there is good investment in IT expenditures so as to improve further our mobile banking and other areas. So with that, now I'll end and I'll request Mr. Sitaram to make a brief presentation so that we can take questions answer after that. Thank you.
Yeah, I'm conscious that many of you may have to attend to other calls, so I'll be quite brief. I will not run through the presentation as such. One thing to take up from where MD left off, see if we exclude the one-offs, the net interest income in Q1 of last year was 1727 crore. Then Q4 of last year, 1881 crore. And Q1 of this year is 2021 crore. So there has been an improvement steadily over the 3 period if we exclude all these one-off. And in terms of NIM, it was 2.8%, 3.09%, and 3.26%. So again, there is a steady improvement in all the three. And so the highlights MD has covered that we have shown improvement on all fronts. The NIM, if we exclude this interest on IT refund in this quarter, is 3.73%. Then cost to income, we are maintaining where we are. ROA, we have crossed 1%. ROE, we are almost touched 15. Net NPA has come down to 1.25 with a PCR of 97.79. Overall, there is a growth in advances, slight decrease in deposit, but if you look at the daily average basis, there is improvement in both savings account as well as retail deposit, and current account is almost the same on a daily average basis. CASA ratio has improved to 55%. Then we're well capitalized now at 19 and a tier 1 of 17%, more than 17%. In terms of in the other income, we have a one-off. In the interest income, we have a one-off. That interest on refund of income tax, that is about 171 crore. And in the other income, we have a one-off, which is gains on sale of stake in RSL, which is about 141 crore. The OPEX has been maintained steadily. If you remember, in Q4 of last year, we had taken one-time hit on family pension and other things, which we could have done over a longer period, but we voluntarily decided to take the entire hit. So if we exclude that effect, we are quite steady. The OPEX is well under control. The cost to income is also well under control at 43%. Overall, there is an improvement in the PAT of 25 and 10% when we compare YoY or QoQ respectively. Then quickly, the NIM I have already covered. Quickly going over to the provisions. Here, what we have done in provision is that we have taken a look at our restructured book under RF1, RF2 and RF3. We already have mandated provisions, slightly above those already, but we have decided to make the anticipatory provision of about 777 crores, and this is for any likely stress that can emanate from this portfolio. So that's an additional contingency provision that we have made for the restructured portfolio. I will not dwell on the ratios. These are all there for you. The cost of deposit, everything trending well, reflecting in the NIM. The movement on the deposits and the breakup of the deposits are all given in the chart there. Overall, I have already given you the picture that in a daily average basis, there is a good improvement. Then on even the net advances, there is a growth which MD has already covered. On priority sector, we have achieved all targets. There is no deficit. So the amount of RADF and other deposits that we have will keep running off, and not likely to be an additional call, except for some gap in the earlier years, which are still remaining uncalled, and there is a scope for the RBI to call that. On the AFS side, the modified duration is quite good at 1.04. Even this quarter, we have booked the MTM losses, but they are quite moderate, and going forward also, we don't expect any unusual shock from that side. For the overall book, modified duration is about 4.13. And in terms of PCR, of course, we already talked about 97.79. In terms of slippage, we are at 2.5 annualized. And in terms of credit cost, we are 0.52 annualized. So this is well within the guidance that we are given, and MD has already guided on mentioned that. And in terms of digital, I'll just make a special mention that we have taken a number of initiatives on digital. We are invested, and we are going forward also. We will continue to invest in improving the digital footprint. About 95% of the transactions, 75% of the transactions are from UPI, which are customer induced, and over 95% of customer induced are through digital media. So that we are progressing well on this. And we also given the status of financial inclusion where we have achievements. I will not dwell on those in detail. What I will do is now I will leave the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Request to all the participants to please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The first question is from the line of Suraj Das from B&K Securities. Please go ahead.
Hello, hi sir. Thanks for the opportunity and congratulations on a good set of numbers. So I have a couple of questions. The first is, it looks like there is a restatement in your balance sheet on a QQ basis. So the March 22 numbers have been restated, especially on advances and cash side. So
sorry to interrupt you. The audio is not clear from your line. Please check.
Okay. Now is it clear? Is it better?
Yes, sir.
Yeah. So sir, the question was, it looks like the March 22 sheet has been restated, and moreover, the is more in the line of advances and cash and bank balance. So could you please let us know, what is the rationale behind restatement, why it is so? That is the first question.
Okay, so that restatement is due to RBI clarification. Earlier they had said that the reverse repo should be included in advance, term reverse repo. Okay, so that whatever was 14 days, the reverse repo is
9,000 crore.
Fine. Now, subsequently, recently RBI has clarified that will be only if it is done through the market mechanism. So RBI reverse repo is to be regrouped back with cash and bank balances. So that's the regrouping we have done.
Okay, understood. And sir, the next is more on the yield side. So it looks like there is a sharp drop
sorry to interrupt you, Mr. Das. Again, the audio is breaking from your line. Please check.
Is it better?
Sir, the audio is breaking from your line again.
Better now?
Yes, please go ahead.
Yeah. So sir, the next question is more on the yield side. So it looks like there is a sharp drop in your yield on advances on two basis. So just wanted to know, sir, what your book looks like. In terms of how many percentage of the book is EBLR or MCLR linked, and what is rationale behind sharp drop.
Sorry to interrupt.
For what?
So I got the question. I will answer it. That's okay. So to answer you, first of all, the primary reason for that, what you say, sharp fall in the yield, is because of the reason which MD mentioned, that in Q1 we had a one-time recovery from Kingfisher as well as Videocon mainly. This recovery comprised a large part of interest, which was taken to interest income. Likewise, we also have one-times like interest on refund of income tax. So if I exclude those, based on that, then the yield on advances on a daily average basis is 8.56% for June 21. Okay, and for June 22 it is 7.63. This movement down of about 80 basis points is mainly due to the movement in the market rates. That is the repo rate and the policy rates have come down. In line with that, this yield has come down. Correspondingly, of course, we have also reduced the cost of deposits. That is how we have managed to maintain and improve our NIM. So before the question started, I mentioned that the NIM has improved, and I gave the figures also without this one-timer, and I hope that answers your question.
Okay. And sir, on the asset quality side, if you can just let us know, what is the amount of total restructured book, and the restructured provision that you mentioned, 772 crore, is it above the COVID restructured provision which is something around 76 crore?
Yeah, under COVID, the slide number 26, we are given the COVID restructuring provision, which is 476, that is existing, which includes the mandated RBI, the provision. To that, we have added this 777. So we have about 1,240 crore against a book of about the 3,100 crore. So we consider this to be quite adequate. We are not seeing really any high level of stress emanating from that, but since we are only in Q1 and the entire industry wants to see the remaining 3 quarters also to go by to be able to assess exactly what will be the stress.
We had the surplus.
So I think most likely this will be more than enough. There will be extra provision here.
And in fact, the restructuring book, as you had asked, it has come down. March 22, it was 3.42% of our advances, standard advances book. Now, as on June 22, it is 2.98% of the advances book. In corporate, of course, 356 crore, because one of the group accounts was there, retail, that has moved to NPA, all of you know. The remaining all, the retail more or less, either accounts have been, out of restructuring book or some reduction is there about 200. So, and some base has also increased. So that's why the restructuring book percentage wise is now 2.98% of the standard gross advance.
Okay, understood, sir. Okay, thank you, sir. Yeah, that was all.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Pranav from Rare Enterprises. Please go ahead.
Hi, sir. Thanks a lot. First of all, thank you for actually ramping the presentation and putting out advances slide correctly, and thanks for noting that from the last call.
Yeah.
And so second thing is also you have included other income that is also solved our problems a lot. Sir, I have just 2 doubts to start with. First of all, the 777 crore provisions that you have done on the restructured book that you have mentioned in the notes to accounts.
Yeah.
Where in the P&L it has hit, because you have also given in the subsequent slides the provisions, and in that there is no figure standing out as large as 770.
I know. See, that is accounting presentation. Say we had made anticipatory provision on cases like future in March itself before they slipped. Now when they slip, it will move out of standard asset provision to NPA provision. Likewise, there are movements in and out of standard asset provision, and what is reflected in accounts is the net of all these the accounting debits and credits. So this additional provision that is made, 777, is also included in that. But you will not see the figure straight away there because of all the various other movements which are there.
Right. So it is somewhere clubbed in that the split of provisions that you have given.
Yeah, that's right.
So, sir, in that case, can you just specify what is the actual restructured book in terms of amount, COVID and non-COVID? Because I remember that previous quarter it was around 7931 crore combined COVID and non-COVID.
Yeah. Yes.
So COVID is 3,422 crore. March 20. 2,983 crore.
Yeah.
Retail. And then the remaining is SA 491 crore, 5/25 306 crore, and other 684. So total restructured standard book is 4,064 crore. It is 2.9%, as I had indicated earlier, 2.98% of my standard gross advances as on June 2022.
4064 crore is the total book.
4064.
Is the total, including all. S4A, 525.
Including earlier S4A, 5/25, all that.
And on that, you have 770 crore restructured provision that you have done this quarter and plus restructured provisions from the last quarter.
See, this 77 plus that 460 is only against 3,100, the 2,900, which MD mentioned of the restructure. The remaining 5 by 25, S4A, all that, they have their own provisions as mandated by the Reserve Bank of India.
Right. That is one question. Second question is that can you just mention little bit in a slow speed exact NIM for the last quarter?
Sure. I'll repeat the figures. The June 21, first time reading out the NII in calendar sequence. 1727, 1881, and 2021. Okay. Now NIM again in calendar sequence 2.80, 3.09, and 3.26.
Perfect.
Yeah.
Perfect, sir. Sir, so on this core NIM, what is the guidance? Like, what could be the core NIM for us?
So we have been, last year I also indicated core NIM will be above 3.25%. We will maintain above that, and this June quarter core is 3.26. So that is, I think we have been able to achieve the target.
Right. Sir, for the quarter, the slippage, is there anything coming out of the restructured book that is also contributed to the slippages in this quarter?
So this corporate book, the NPS, if you see this slippage breakup, so out of 964 crore, 443 crore is from corporate. Out of that 443 crore, 356 crore is coming out of that what he had mentioned.
Future, no? All the future cases are all restructured under
Restructured, so 356 crore. Remaining all is only one account. So only 3 accounts were there, 2 from future group and 1 from other. So that now that's why this restructured book has also come down in corporate.
Right. So only 356. So 356 crore was
from corporate, and a little bit is there from retail. Not
so
much.
that 356 is from restructured book previously.
Yeah.
Perfect, sir. Perfect. Thanks a lot. I will come back with more questions.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Renish Bua from ICICI Securities. Please go ahead.
Yeah, hi sir, and thanks for the opportunity. So there are just a couple of questions. So one is on the slippage side. So sir, of total slippages, how much of the slippages has flown from the standard restructured book this quarter?
Yeah, we mentioned this one, the COVID restructure. So if we remove that, okay, from the standard from the standard restructured book, hardly anything is there. So when you say standard restructured, other than COVID restructured, so we have this 5 by 25 and the S4A and other restructuring. Hardly any cases have slipped from that. In fact, I will probably say 0.
And from COVID restructuring pool?
That is what we mentioned, that the future, that 356.
356 in corporate and 92
in retail.
That's all.
Okay.
Otherwise, all accounts are running fine.
Got it, sir. And sir, secondly, this is more or less on the industry level. Okay, so maybe we have seen this, the corporate credit has been sort of gathering the pace from last 4-5 months, after almost 4-5 years of a muted credit growth. So what is your experience, in the corporate segment? I mean, you guys also sort of see that corporate demand is picking up and it will sustain going ahead?
Yeah, I think 2 or 3 factors are in play simultaneously. One, as you said, after 4-5 years of muted investment cycle growth, investment cycle is back on the table. But that has not contributed to the growth so far. That is still in the process of being tied up, and disbursements on new investments are yet to happen. But if you look at working capital drawings, I think there has increase in the utilization of working capital. One, there is a capacity utilization pickup in the corporate.
Mm-hmm.
There is a cost push inflation which has increased the value of the inventory held. and
Correct.
the drawing power or the utilization under the working capital limits already sanctioned has also increased. The third one is a lot of borrowing from the bond market and money markets have come back to the loan market now, because the interest rates in the bond and the money markets have moved up much faster than the MCLR of the bank. So this is a multi-factor play, which we are seeing some push in the credit offtake.
Got it. So just a follow-up on that. So on the last point about the rate transmission, which is a bit faster on the money market side. Would you put it under the seasonality, or do you feel this trend will continue given there is more rate hike likely?
I think this will continue at least for this year, full year 2023. After that, we will have to see where interest rates stabilize.
Got it, sir. Okay. That's it from my side, sir. Thank you very much, sir.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Pranav from Rare Enterprises. Please go ahead.
Sir, thanks a lot. Sir, can you just highlight what are the steps now taken for divestment of government stake? So there was a news in the media that government is asking for something from RBI which will ease the process.
Actually, as you are aware, this entire process of disinvestment is being held by DIPAM, and they are the seller. Basically, they are the owner of the bank with like 45% share with Government of India and 49% with LIC. So the entire process, since it is being handled by them, so they are only running the process. So I think they will be in a better position to answer on this disinvestment question, because we are only aware whatever is coming to media. Otherwise, as such, they will be the best persons to answer this question.
Right.
I'm sorry.
Sir, in terms of your cost of employees, is it safe to assume that now this quarterly run rate of around 717 crores will continue, and then there will be a nominal inflation of 10%?
Yeah, I mean, we have to account for DA change. That is one. Plus, also you have to remember that we have not done any major recruitment for nearly 4 years, mainly because we are under PCA. Now, as business expands, and of course we are pushing on digital, but still we will require a little more on staff complement also. So some amount of addition to staff will happen, and that will also raise the staff cost a little. But I believe that it will increase, but it will increase by a small amount.
Right.
We are not anticipating too much on the AS15 till this interest rate regime actually has a different impact.
Right. Sir, can your upgrades and recoveries be much more than what you had guided previously of 4,000 crore? Because this quarter itself it was very good. The IBC is still to catch full steam. So can we expect that the recoveries and upgrades will be higher than 4,000 crores for the year?
We are maintaining our guidance at 4,000 crore.
4,000 crore we have estimated for the full year, although like pro rata almost 1,136 we have been able to recover. So let us see, we will review the position at the end of the second quarter. But as of now, we are retaining the target at around 4,000 crore only.
Right. There was one SK Energy or SK Power, something like that in Odisha, which was recovered this quarter. So we have any exposure to that?
I don't think so.
No.
In last question from my side, sir, in the IBC pipeline, are there any big accounts that you see are on the anvil for resolution, where we have considerable exposure, like in this year?
Video call. Good.
We have Videocon coming up, but we will have to wait and see.
Right. And what is the exposure that we have for this account?
Videocon oil, we have
Around 4,500 crore.
yes, 4,500 crore.
And we have fully provided for it, right?
Yeah.
Yeah, fully provided.
Yes.
And what is the expected recovery? Like it will be 20-30%?
Too early.
Too early, because the last date for receiving new bids is still, we are still in the process.
Okay, sir. Okay. Thank you, sir.
Thank you. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
So, thank you very much for attending this conference. But we are aware, as Sitaram said, that you have to join some RBI conference also. Thank you very much. Despite that busy schedule, you have spared time. And thanks to ICICI Securities also for organizing this conference very nicely. Thank you.
Thank you.
Thank you.
Thank you.
Thank you, sir.
Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.